we've got David Salim, who is Group Chief Executive and Principal Solicitor with Hetherington. They're our legal partner. David is going to talk to us about due diligence, the key to commercial success for resource companies. So please welcome David.
Wait for a presentation to come up, but thanks for having me today. Oh, have a look at this. All right, so today's presentation, due diligence, the key to commercial success for resources companies. And what do I mean by that? So when you're investing or acquiring a project, you're looking at something, is it worth 100 million? Is it worth 80 million? Are you buying a lemon? There's that responsibility to the shareholders there, to your board, and really, in my experience, you need to dig a little bit deeper to truly understand what you're buying and the commercial implications of that. So what does that look like? What's involved in that process? The commercial implications, like I touched on. Is it worth the asking price they're asking for? And then I want to go through some of the critical nuances in each jurisdiction. You heard a lot about lithium just now, so I'm going to touch on some of the James Bay, Canada stuff that's been very relevant lately. And obviously some of the large jurisdictions like WA. So as you would be aware, the Valming code that goes through pretty much replicates the requirements of the Corporations Act and ASIC. What does that involve? There's a list there, but the main things are independent financial reports, geologist report, and a solicitor's report. And the point of that is to make an evaluation on the status of a mineral asset and its associated tenure. So is it in good condition? Are you going to buy something that's got skeletons in the closet? And how you can deal with that. And if you're aware of it, you can normally put an action plan together for that to counter and future-proof that asset. All the overseas jurisdictions, whether it's Canada or America, Singapore, they pretty much follow that same format. So here, the one thing to note is since 2018, ASIC has really clamped down on this, and they really do, they'll reject anything that they don't think is appropriate, and they'll make you do it again. And it really needs to be prepared by an appropriate qualified legal practitioners to allow investors to make an informed assessment of its reliability. And that's what I'm getting at there. It's that reliable, that what they're saying, it actually stacks up. So this is what's required for a public listing. And this just gives you a real good summary of the asset and the project you're looking to invest in or to acquire. So it's pretty high level. So you've got the area there, your commitments, obligations, encumbrances, any environmental requirements, associated land tenure, and anything of material value. The next slide is probably where it gets a bit interesting. In my professional opinion, as a Valming practitioner, that's not enough. You're really just skimming at the surface and you're just getting a summary. Before you can really confidently go in and invest millions or even billions of dollars, you really need to dig deeper. And you'll see that most companies, 90% of the time, they will get their own due diligence. So notwithstanding there's an IPO with an independent prospectus in there, an independent solicitor's report and geologist report, they'll do their own due diligence. And I highly recommend that. And some of the things that you should really be looking out there that won't be incorporated into that IPO are on the right-hand side here. So one of the things, and I'm just going to spend a little bit of time here because this is when we talk about ESG and the low-hanging fruit that you can really uncover here, and that can either be a lemon or you can add a lot of value and a lot of upside to a project. So the conditions of license, the devil's in the detail. So a lot of them might have restrictions, and you won't necessarily find that in an IPO, and that might be the issues that they're having in terms of getting on the ground. There might be additional red tape, things like that. So you really need to get a copy of those conditions and really go through them. The work program is a big one that a lot of juniors get stuck on. So in a lot of jurisdictions, whatever work program is for that project, you need to commit to that. You can change it, but there's cost involved, there's time delays involved that might not meet your short-term exploration goals. So that's something you really need to be aware of and see if you can make that commercially viable in the short term. The exclusion, one thing I will tap on here is exclusion areas. So on the left-hand side, the IPO, it's going to show your tenement footprint and anything that's overlapping. it's not going to show holes in your tenement. So a lot of people get stuck on this. So there's always little holes, especially in old tenure, old consolidated mining projects, things like that. So you really need to do a full historical search to understand, okay, what are the inherent commercial risks there? They can be managed as long as you're aware of them. This is where we talk about ESG. Environmental approvals. Sure, the IPO says these are the environmental requirements. Okay, to have a mining license, you need to have an environmental approval. But what else? So the other things you need to be looking at is water access license. It's a massive one. Water, dust and noise pollution, things like that. Can you get those licenses? One, are they in good condition? What do they look like? What are for example, the extraction limits? A lot of companies go over the extraction limits. So that's something to definitely be aware of. This is the key one, land access and compensation. So ASIC has taken the view in the last few years that any project you're looking to raise capital on needs to have a land access arrangement in place. And if not, they'll reject it. And they'll ring and they'll ask 1,000 questions. And so we've tried to explain, well, you only really need a land access arrangement for the area you're working on, the area that you're actually drilling on. And that's an uphill battle and it's getting harder and harder. So in terms of governance and ESG, that's something that ASIC is picking up every single time and asking a lot of questions about that. And to be honest, that's where a lot of people get stuck. They might not have the right management protocols in place. There might be a rogue drilling contractor that's run over a fence or a tree or a sheep or something like that. So this junior company's done everything right and it's just one little thing like that that causes a problem. Rehabilitation's the big one. I've seen time and time again companies go out, no rehabilitation. So one example recently was we had a $100 million security bond. We got in there, did the acquisition. Within 3 to 6 months, with no physical work, just desktop studies, we reduced that bond from 100 million to 45. So that's 65 million straight in the bank. It's a big upside. So just through poor management, there was no on-the-ground work done. So there's a lot of low-hanging fruit that you can see there. Aboriginal heritage, WA, that's very relevant at the moment as well. So just to be aware of that and what the implications might be, especially with the changes of the legislation lately. The last two are probably the big ones. Compliance. The Farming Code just doesn't say, have they submitted absolutely every single report, fee, are there any forfeiture applications coming up? Have they been fully compliant? And especially in WA, the High Court cases of late, so it needs to be a strict letter to the law approach. The Minister's discretion is no longer there. So really ensuring that that tenement and that company has been compliant and met all their obligations, so there's no risk of losing the asset there. And then, yeah, the future obligations. Is it going to, sure, everything looks good now, but in a year or two's time, is everything going to expire? Can we renew it? What does that look like? How much is that going to cost? Are the council rates going to go up tenfold? So things like that to look into the commercial viability of the asset. So, you know, what do we get from that? So making a fully informed decision on the commercial viability of the asset. So, you know, and taking that into your commercial negotiation. So, you know, there's 200 odd tenements, mixture of E's and P's, L's, M's, and 50 are under forfeiture, then they're probably not worth the $100 million they're asking for. So having that up your sleeve so you can make a fully informed commercial decision. And looking into some of those governance matters, like if there is no land access arrangement in place, why? Is there an arbitration? Is there an objection? Is there something else you need to be aware of? Can you actually access this land? A lot of the times, or not a lot of the time, sometimes you will see that that's the reason why the mine hasn't gone ahead, because there's some issue there with the land. Due diligence, what that looks like. You know, sure, there's the legal implications of your responsibility to your shareholders and your board and things like that. But really, in the practical sense, you really just want to be adding value to your company and buying something that you can improve. And like I said, not buying a lemon that's, you know, we had one example, company bought a project in Africa, gold project, $80 million. Turned out to be nothing there. It's now worth nothing. So, you know, just avoiding those type of situations like that. So yeah, now going through some of the key jurisdictions and some of the things you really should be looking at here. So WA, I've seen a couple of big companies get stuck when the tenements just run out of time, and it's difficult to repeg that. Some of the underlying land tenure, just being aware of that and the differences and how to manage that. The big one, like I said, is the compliance. So the risks of forfeiture. The fact is it's the letter of the law approach now. The minister's discretion that was available 5-10 years ago is no longer the case. So just making sure everything's in squeaky order. The next one is New South Wales. So it's probably a little bit of an underrated jurisdiction, and there is a lot of upside here. Just because some companies, especially juniors, find it difficult to navigate the landscape, the regulatory landscape. So the big one is, which we see time and time again, a mining lease is renewal pending, and it could be for years. Why? There's an issue. If it's renewal pending for more than a year, there's an issue. They'll say, there's no issue. There's always an issue, whether it's the environmental approval, which is called the development application. There's a number of agricultural land objection, significant improvement objections, something like that. So that's something to be aware of. That's a big red flag, and you'll see that in every single IPO. There'll be tenements renewal, and just looking at the time frame there. Again, compliance is really important in that state. The regulator there, all ex-policemen, they won't hesitate to cancel your mining lease. It's happened time and time again. Queensland, a lot of paperwork in Queensland, good jurisdiction to operate in, but a lot of paperwork. So just being aware of those work programs, like I mentioned before, and understanding if that can fit your short-term exploration goals. The royalties, obviously just being aware of 40% to your bottom line on a coal project, it makes a big difference, and it's seen a lot of investment go from Queensland to New South Wales. Okay, so coming down to the hot space at the moment, which we've been working a lot on over the last 1 or 2 years. So this James Bay lithium precinct, so Ontario and Quebec. The difference there is it's very much the surface rights and the First Nation groups. So having those agreements in place for your activity approvals or drilling approvals, understanding what the requirements are, and you have to consult with them right the way through to expand your footprint or do any extra work. And it's the same for Quebec, like I mentioned. So there's this obligation to continue to consult and ensure that all the work's done. So here, if you don't meet the work program, you lose your tenement and you've got to pay a big fee. So there's a whole bunch of things there to be aware of. So those two jurisdictions are very similar, but like Australia, each province has its own kind of set of legislation that you need to adhere to. South Australia, I was talking to some of the guys out the front about this before. It's just, it's changed in the last couple of years, the new legislation. The latest Hetherington mine got rejected in February of this year. That's the best indication. So there's a lot of exclusion areas to be aware of that might not necessarily be picked up on. And that can lead to a big portion of your footprint not being able to be explored on. Northern Territory, my key advice here again would be to split your project into 3. So depending on your land tenure, whether it's native title, Aboriginal freehold or freehold, split your project via those 3 terms and you can basically navigate it that way. So that's the best way, in my opinion, to run Northern Territory. We've had a lot of success in doing that. And just quickly, some of the other little states, so Victoria, same thing, recent legislative changes just to be aware of that can kind of unstick your renewal term and the term for your tenements, and same in Tasmania. So basically, in summary, you're looking at buying an asset, you want to make sure it's commercially viable. What are the risks? Can we manage those risks? Okay, there's a hole in a tenement. What does that really mean? Okay, there's a native title obligation. What's that cost going to be? The arbitration. And just making sure that's commercially viable for your project. So, okay, if you're going to spend $100 million on this project, what does that look like? And what are the additional costs you need to put in there? And can you get it for less? So a lot of the time, like I said, that one that had 200 tenements, 50 under forfeiture, it's a different prospect. So just having that up your sleeve to make a fully informed decision and using that really as leverage in your commercial negotiations. That's it. Thank you.